Hey, welcome back to YT Finance, and today we are talking about the bad news regarding Palantir Technologies PLTR stock. We're going to be talking about the various macroeconomic factors that are pushing the stock price lower, not only for Palantir Technologies, but the overall stock market, and then we're going to go over a very bearish article regarding various authors talking very poorly about Palantir Technologies, so I'm going to go through it, tell you the things that I agree with, some things that they are actually misinformed about, and what we can think of Palantir Technologies after you know all of the bad news regarding it. On this channel, we talk about both the good news and the bad news for various stocks. So for more Palantir stock videos, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about Palantir Technologies, and without further ado, let's just get right into today's stories. The PLTR stock has been very volatile lately, either dropping 3% or surging by around 2% give or take. The overall stock market has been very volatile, mainly because of the war between Russia and Ukraine, various macroeconomic factors such as inflation, as well as various investors pulling their money out of growth stocks and putting it into value stocks, or even certain type of investors that are very risk averse, pulling their money entirely out of the stock market and investing into bonds. Right now, the PLTR stock is currently worth around $11.59. The low-end 12-month analyst price prediction for the PLTR stock is $9. The average PLTR stock price prediction among analysts is $15.94, and the high-end PLTR stock price target among analysts for the next 12 months is $25.30. Right now, around 10 Wall Street analysts cover the stock, with only one of them saying that Palantir is a strong buy, 5 of them saying that the stock is a good holding opportunity for future long-term holders, and 4 of these analysts actually say to sell the stock. Now, why are so many Wall Street analysts and various investors very bearish on Palantir Technologies? Well, first off, the main bad news for Palantir Technologies comes from recent insider selling, specifically from their CFO, which is their Chief Financial Officer. And according to a recent SEC filing, or a Securities and Exchange Commission's filing, we know that he sold a large portion of his overall stock. And this has seemed to scare investors. And as we can see from the chart below, the stock price has been downtrending ever since their all-time highs, very close from what the stock was originally trading at when it DPO'd on the public stock market. So what about the CFO selling is scaring investors? Well, the CFO recently sold around 201,190 shares of Palantir Technologies, which gave him around $2.1 million worth of compensation for selling his stock. Now, this doesn't necessarily mean that he has lost faith in the underlying company of Palantir Technologies. He could have done this for a multitude of reasons. One of which is the most likely is that's how he gets paid. He gets paid in stock, and he liquidates the stock to actually turn that into cash so he can spend it and use his capital elsewhere. Now, people who don't like Palantir Technologies say this is a very bearish catalyst for the overall PLTR stock, and that is scaring very bullish investors. However, on the flip side, Palantir did report very strong earnings for their full year of 2021, as well as their quarter 4 2021 results on February 17th, and I have done multiple videos going over that their earnings report was actually good, despite the stock price falling after their earnings report. Because the stock price wasn't necessarily falling because of their earnings report, it's falling due to macro and geopolitical factors that we mentioned earlier. Now, the company did miss on their adjusted earnings per share, or EPS, which came in at around 2 cents per share, while analysts actually estimated that they should have brought in 4 cents per share. So that is a pretty large miss. However, their revenues actually beat analysts' expectations because analysts and Wall Street professionals thought Palantir was going to bring in around $418 million, and they actually brought in around $432.9 million, which is fantastic news. We also have revenue guidance for quarter 1 of 2022, which we will talk about in this video. However, despite this earnings beat, a Citigroup analyst actually lowered his PLTR stock price target from $13 per share down to just $10 per share, and he actually maintains a sell rating for the PLTR stock. This has been reflected very negatively in the PLTR stock price by this particular analyst downgrading the PLTR stock price, and this has added to the negative sentiment around PLTR stock, and that has helped push the PLTR stock down roughly around 19%. Now, the good news is that Palantir Technologies is anticipated to post around $443 million worth of revenue, and they're supposed to bring in an adjusted operating margin of around 23%, and that's overall really good news. Their management has also doubled down and reiterated that Palantir is supposed to grow at a CAGR, or a compounding annual growth rate, specifically for their sales and revenue, of around 30% through 2025, and their estimates can even eventually beat 30% according to management. Now, this is very good news, but we're actually going to go over a very negative bearish article surrounding their revenue growth that I think investors should at least be aware about. Now, although the current stock price is trading at around $11 per share, it is still trading at around 11 times their expected sales for 2022 and around 57 times their expected earnings, because their market cap is around $22 billion right now. So also keep in mind that you are technically paying a premium for Palantir Technologies, so if you want quick returns for this stock is probably not for you. This is only for aggressive long-term stockholders. Now let's dive into this very negative bearish article about Palantir Technologies and to see what I personally think about this. Honestly, this article is almost like a hit piece on Palantir Technologies, so let's see what it has to say. So they admit in the article that Wall Street underestimated the supercharged revenues of Palantir Technologies and the compounding annual growth rate that they are scaling their revenues at. If you didn't know, Palantir has implemented a strategy mainly for their Foundry for Builders program, where they invest into SPAC companies, and in return, those SPACs either sign contracts or they operate a subscription model to pay Palantir Technologies for their Foundry platform. So in essence, Palantir Technologies is literally buying revenue from these smaller SPAC companies. Now, Palantir Technologies actually justifies this by saying that they honestly believe in these up-and-coming companies that are currently burning cash because they believe in the future projections for these particular companies. Because if Palantir invests into these companies and these companies actually make something of themselves in the future, this could pay off very handsomely for Palantir Technologies. However, currently Wall Street is just saying that Palantir is using this to increase their overall revenues. So let's actually see how much this is impacting their overall revenues to see if investors should be concerned about this. According to the article, if we take out the SPAC revenues that Palantir is accruing, Palantir's overall revenue growth only grew at a rate of around 26% instead of the reported 34% in revenues. So that is a huge decrease in overall revenues. However, I personally don't have a problem with them investing into SPAC companies because revenues are revenues. The article does point out that these technically could be strategic investments that Palantir is holding for the long term, and that's what I personally think they are. However, Wall Street still thinks that this is a very questionable corporate strategy, just meant to inflate their overall revenues to impress investors. Now, the reason why I don't buy this is because if Palantir Technologies really wanted to impress investors right now, they would stop stock-based compensation. The company would literally become profitable on a GAAP basis within 1 or 2 years, and if they really wanted to inflate their revenues, they would invest even more into these SPAC companies. So not only would the company now be profitable, they could also inflate their revenues more. However, clearly Palantir Technologies is not doing that right now, which is why I think Palantir Technologies sees these SPAC investments as a strategic investment, and as far as their stock-based compensation is concerned, I think Palantir is using this decently wisely because they are scaling back on their stock-based compensation, which is going to move them further toward profitability, but they still want the stock-based compensation, which will attract the best talent in the world because Palantir Technologies will be able to pay their engineers more than the majority of other companies. Now, the article also highlights 2 quotes from RBC, which are very respected institutions. Specifically, RBC said that we continue to believe government is the stronger part of Palantir's business, and a slowdown is a worry, especially since we believe Palantir received meaningful one-time COVID-related business during the pandemic. Likewise, the article says Morgan Stanley also commented about this, saying that the new cohort analysis presented by the company suggests Palantir added just $8 million in new government revenues in 2021, down from $77 million in 2020, and added 0 net new government customers. End quote. Now, my problem with this is that Wall Street is playing both sides here. They're saying that Palantir is too reliant on government contracts, therefore they're not diversified, and if anything happened to their government revenue source, that the company would overall be screwed. Then on the flip side, they're also saying, well, even though Palantir is diversifying themselves and focusing on scaling their commercial clients, their government revenues are taking a big hit, and because government revenues are now falling, this is a big problem for the stock because we love government revenues. But in my opinion, you can't have it both ways. You're either very bearish on government revenues or you're very bullish on commercial revenues. You can't encourage the company to diversify into the commercial sector and take away their efforts from government, and then as soon as they do that, then you criticize them for not focusing more on their government clients. That makes absolutely no sense sense at all. And I personally believe, and have been saying for months, that their commercial revenues will actually be the new revenue growth driver for the overall company, and it will be eventually the thing that takes Palantir into profitability in the near future. So at some time within the next few years, their government revenues and their commercial revenues are going to eclipse each other, with their commercial revenues eventually outpacing their government revenues, which to me is good news because there's plenty of money in the commercial space. So honestly, this very bearish analysis of Palantir Technologies does have some truth to it, and investors should be aware of their SPAC investments, stock-based compensation, as well as the decrease in revenues in their government work. However, their revenues have been more than made up for their commercial segment that has been growing very rapidly. Their stock-based compensation is being used wisely to recruit new and smarter engineers, while also scaling back stock-based compensation to eventually reach profitability. And as far as their SPAC investments go, those are strategic investments by Palantir Technologies, because Palantir may keep these companies for the long term. So all of these have fantastic rebuttals that are not mentioned in this particular article. So even after the recent decline of around 40% for Palantir Technologies, the PLTR stock is technically trading at a premium, but if you are a long-term growth investor into the company, this could be a good stock. Don't invest into this company thinking that you're going to get your money back anytime soon. This is going to be a very good long-term play, in my opinion. Now, with that being said, if Palantir Technologies already makes up more than 5% of your portfolio and you are a long-term investor, it's probably best for you just to move on to another company right now, because proper risk management says that you have now met your portfolio weight for this particular company, because any more percentage allocation would actually add unnecessary risk to your overall portfolio. So overall, we can still be very bullish on Palantir Technologies. They have a great Q1 revenue projection for 2022, and they are scaling their commercial business very nicely. So I would love to hear your thoughts down below. Subscribe if you are new, like this video if you haven't already, and I'll see you in the next YT video.